Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Let me display the PowerPoint presentation. Asian session live market analysis on November 7th between 5 and 5:30 GMT. So we'll be tracking the market using the live market code page. I'll also give the link in the hotcom window. I'll now focus the camera over that of the live market put page. Now you should be able to see the live market put page. Euro is currently trading around 1.3771, 1.3773. The low was 1.3745, the high was 1.3836, and 19 pips negative net change is seen. During the start of the session, they made an upward stop and above that of the Friday close level and went up to 1.3836 and made a downward move to 1.3745 and holding it in the middle level. And it is still closer to the low with a negative net change from that of Friday close. So it is 19 pips lower than that of Friday close. That's what it indicates around 5 GMT. Now GBP also made an upward stop and formed the high 1.6074 and the low was 1.6008, currently trading around 1.602326 and showing about 8 pips negative net change. So it's not a big deal making a small negative net change. And also in the case of yen, you come across about 10 pips negative net change from the Friday close, currently trading around 78.11, 78.14. 78.07 is the low, 78.21 is the high, and so such a narrow range is seen currently. And when Euro GBP and USD Yen show negative net change, we know that it is a contrarian move to make a downward move in the case of the Yen crosses. Euro Yen is showing negative net change of 31 pips, and GBP Yen is showing about 23 pips negative net change. So you find that Yen crosses are being made at downward move before making an upward move. Alternatively, they make the downward and the upward move. And in the case of USD CHF, it has gained about 81 pips. When Euro has just dropped about 20 pips, USD CHF has gained about 81 pips, which indicate that they wanted to gain more in the case of USD CHF silently after making all the downward moves last week. And USD CHF gaining more indicate that they wanted to make the week beginning false move of USD gaining moves to start with. Then later on, they could make further upward moves in the case of Euro and GBP. And normally you come across in the first week of the month, both BOE and the ECB interest rate decisions are to be announced. But this time, it is going to be in the second week as far as BOE interest rate announcement and the asset purchase, etc. So when such a move is happening, that is when it is shifted to the second week, then the players continue to make either way moves till such time. Once the prime data are out, like the ECB interest rate, BOE interest rate, and then on-farm payroll, then they make their decisive moves or the trending move for the month. So till Thursday, we could come across either way moves in the market, and afterwards there could be more of the USD weakening move coming with regard to Euro and GBP. Before that, the denominator currencies are expected to gain more levels, and that is how they gain all the levels and later on make some sideways moves during that of the gains in the case of Euro and GBP, so that their crosses will also be handled accordingly. Then in the case of Canadian dollar, you come across it is trading around 1.0168, 1.0172, 1.0152 is the low, 1.0201 is the high, about 17 pips negative net change is seen. And in the case of Canadian dollar, they came closer to that of the parity and then subsequently started gaining the levels again. And in the case of Australian dollar again, it went up to 1.04 area and then started making that drop. Currently trading around 1.0366, 1.0369, 1.0345 is the low, 1.0425 is the high. So it is trading closer to the low currently, and it is also showing 4 pips negative net change. When Canadian dollar and Australian dollar show negative net change, it is a contrarian move. Canadian dollar is showing USD weakening move by making a negative net change, and Australian dollar is making USD gaining move by showing negative net change, even though it is nominal negative net change. When they show such moves, we understand that they are handling the crosses for the weak beginning. So this gain in the case of USD CHF is also mainly to handle the crosses, and in the case of Euro CHF, we find that it has gone to 1.22939, 95 and 97. 1.2201 is the low, 1.2307 is the high. 96 pips positive net change is seen. So quickly they gained the levels in the case of Euro CHF with some attributes. So when they are making the contrarian moves, it is better to focus on the crosses, not to take positions in the case of majors, because they may not give any good profit for us. So only if it is near the low or near the high, we will initiate the trade. If they are in the middle level, we will simply watch, and without a position, we will watch so that our mind will be very clear, not gripped with a fear, so that we will look for a nice opportunity to take positions. And that way, if you do it by reading the market, then it will be easy for us to make money from the market. If you become addicted to trading and wanting to take positions as soon as you open the trading platform, then probably your patience might be tested. Let me go back to that other PowerPoint presentation. So we have done the analysis with regard to the high and the low and also the net change in each pair, and identified whether they are making contrarian move or the USD gaining move or the USD weakening move in all the majors. So that sort of understanding is very important as soon as you open the trading platform. But you may not be able to see the net change in many of the trading platforms. So it is better to look into that of the live market code page and understand how exactly those pairs are performing. And also, if you look into that of the chart, probably you will be focusing only one currency at a time. So you may not be able to make a relative study of all the majors, whether they are making USD gaining or USD weakening. If you study one particular currency, probably the news release pertaining to that particular currency might look significant for you. And because of that, they have made the moves you might think. But after about a brief time of 2-3 hours, you will find that particular currency will also fall in line with that of the rest of the market and start making the moves differently. So in order to avoid surprise, always look into that of the majors simultaneously rather than looking at them as the individual pairs. Even though you might be interested in only one pair like Euro or GBP, but still make a relative study with regard to all the pairs, how exactly they are being made to make specific moves, so that you will be able to understand, are they doing USD gaining move, USD weakening move, or the contrarian move. When they are making contrarian move, just keep away from the market unless and otherwise you are interested in taking positions in the case of the cross. Now, from today onwards, you come across the market timings are altered, and the daylight saving system is off from yesterday in US. So here afterwards till mid-March, you will come across this market timings. So you can make a note of the market timings. So 0030 to 7:30 GMT is the Japanese session. 7:30 to 8 GMT is the gap time before the start of the European session. European session will be from 8 to 14 GMT. Then 14 to 14:30 GMT will be the gap time. Then 14:30 US session starts. So earlier it was 13:30 GMT. Now on it will be 14:30 GMT. So the end time will also get extended. It will be 21:30 GMT. From 21:30 to 0030 GMT next day, you will find the gap time before the start of the next day. And when you make a note of these timings, then it will be easy for you to identify the type of moves they are making in the market and how exactly during gap time they make the false moves. These things you will be able to understand. I explained in Tracking the Forex Market Together webinar the type of moves they normally make it in sequence, and if you follow those moves rather than focusing more on the levels, then it will be easy for you to take trading decisions. Now coming to the forecast for today. So it is 7th of November. So Japanese session, swing and slide moves are expected in the case of Euro and GBP. They already made the downward move and they are holding it closer to that of the low. Afterwards, they are expected to go closer to that of the low towards late Japanese session. In gap time, there might be a small firming up move, and then afterwards, they are expected to drop during that of the early European session and swing near that of the low. Again, during the US session, they are expected to drop and swing closer to that of the low. So it could be the weak beginning false move of a downward move, and then it all depends upon the volume, and if the volume is not adequate for them to buy and higher level long holders are still there or the lower level short sellers are still there, then they will try to make a little bit of volatile moves up and down to induce them to do the short covering or the long liquidation. Then they will try to buy at a lower level, because from this week onwards they are expected to gain significantly in the case of Euro and GBP. So you find on 10th of November, BOE is expected to announce the interest rate decision. Till such time, you could come across alternative moves of USD gaining move and the USD weakening move as a volatile move or expected to prevail. They may do it a range bound or a wide range swing in the market. So may not make one-sided rise or one-sided drop. So, but in the case of Euro, whenever there is a triggering news come, then probably they may go to 1.36 or 1.3550 and then start accumulating the buy position and try to hold around 1.37 and then induce the traders to sell and then take it out. So avoid doing sell and buy trade. Probably today you can do it when you happen to sell near that of the high. Otherwise, avoid doing the sell and buy trade and wait for the market to drop and try to take a buy position during this particular week and then start keeping stop at entry. Then you will come across the trending move of that upward move that could last till end of the year. So you'll have a great opportunity of doing the position trade. You know that first week and the last week of the month, the swing trades alone are possible because they tend to make either way moves, and that could prevail till coming Thursday. Afterwards, they are expected to make one-sided gains. Then avoid doing sell and buy trade during that time. You try to do only buy and try to keep stop at entry. When the going is good and the stop is not filled, you can take more buy position at a higher level also. And once the position makes profit, keep stop at entry. That way, if you could do it, you may accumulate more positions, but still you will not incur any risk in the market. And that is the type of trading strategy you can follow during the trading time. Now coming to that of the rest of the days, the moves during rest of the days, tomorrow they could make during that of the Japanese session a very good drop. So expect the unexpected. They could make a very big drop after making a gain today towards during the nominal. I mean, they are expected to swing at a higher level when compared to that of tomorrow's level. So they are expected to make a downward move and discourage the long holders to liquidate the long positions, and they could make again a downward move during that of the late European session tomorrow. Then Wednesday, again they are expected to make a downward move. That could be a very aggressive downward move. Probably they may say so many attributes for that, and Greece might be in great problems, etc. Then afterwards, we'll find the gaining moves. On Thursday, they might make a dip. That may not be the low. And Wednesday, they could set the low for this particular week during the Japanese session. And afterwards, they are expected to make a dip before that of the BOE interest rate announcement and start making the gaining moves. And Friday, you'll come across more aggressive gains happening in the market. Then next week, as usual, on 14th, they are expected to make the week beginning false move of a dip and then continue the rise. So that is how the trend is expected to happen. You might think that the Greece problem is still unresolved and things like that, but you will be able to see that the players bring in surprise in the market by gaining more levels in the case of Euro and GBP, even though people talk politically about the uncertainty in Europe. Then coming to that of the initial lows and the highs set around 3:30 GMT. On a daily basis, we make a note of it, and we also try to relate the current market with regard to the initial lows and the highs and understand how exactly they tend to make the moves in the market. Now, the low in the case of Euro was 1.3745, the high was 1.3836, and they are not disturbed it, and market is in the middle level since they are handling the crosses, making small swings. And in the case of GBP, 1.6008 is also not breached, and slowly you come across GBP is coming closer to that of the low when compared to that of Euro. In order to create the sentiment, they could drop GBP to start with. And as a result, you might find that Euro GBP start gaining the levels before making further drop from that of tomorrow or day after. Then in the case of CHF, they gained quickly the levels to that of 89.36 and they made an upward stop onto 89.39 and start making the slide to 89.25 current level. The low was 88.69 and they could make a drop and probably they could come below that of 0.89 briefly or come closer to low and then start gaining the levels again in the case of USD CHF. Now, the gain in the case of USD CHF was mainly to handle the crosses. When Euro has made lesser drop and CHF has gained more level, is mainly to handle the crosses. Then again, it has come to that level of consolidation. 78.10 was the initial low, and they breached and formed 78.07, and 78.21 is the high. And now at the moment they are handling the yen crosses. That is why they made a small dip or a downward stop and below that. And probably they could, once the volume picks up, they could talk about a fear of intervention and things like that. Even though there is no physical intervention, they may simply say fear of intervention and USD yen has gone up, things like that. And Australian dollar 1.0345 was the low. That is intact, but the current market level is 1.0361, just about 15-20 pips above that of the low, and the high is quite far away, 1.0425, and it is making currently about 9 pips negative net change, and it is expected to make swing and slide moves during the day. And you know that commodity pairs are expected to lead the rally and lag behind, and they made an upward move, and afterwards they are expected to make the USD gaining moves. And here afterwards, you'll come across more of a contrarian move. Commodity pairs might be showing the USD gaining move, and also the denominator currency is showing the USD gaining move. But Euro and GBP are expected to make the USD weakening move. So you'll come across the contrarian moves to continue during this particular month and also the next month in order to make aggressive moves in the case of the respective crosses. And in the case of Canadian dollar, 1.0152 is the low, which is not breached. 1.0201 is the high, which is also not breached. Currently staying closer to the low. As you see that Australian dollar and Canadian dollar are making negative net changes. They are making contrarian moves. Later on, they are expected to gain the levels in the case of Canadian dollar as well. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which are asked here. Then Francisco, what could be the low in the case of USD yen today? USD yen, they made a brief downward stop and gone above that of the initial low, 78.10. So probably they may start gaining the levels, showing USD gaining move. And still the range is very narrow. Let them increase the range, afterwards you can enter into the market. Otherwise, they may just show 1 or 2 pips profit, which will be really frustrating. Let them make the spread between the low and the high, about 40-50 pips. Then you enter during the small dip, even it can be 78.23 or something like that, doesn't matter. And then it is easy for you to book profit. Always keep in mind that once you enter into the market, you should be able to exit as quickly as possible with a profit. Simply holding the position may give the mental satisfaction that I am holding the position. You become possessive of the position, but that is of no use unless and otherwise you make profit out of that. Then Mina, when can we expect 0.91 levels in the case of USD CHF? Probably we will come across very soon that above that of 0.90 and 93 in the case of USD CHF. They are expected to make aggressive gains. And probably Euro CHF, they could give an attribute that S&B is interested in peg it at 1.25 or 1.30 and start gaining the levels. Suddenly they make a release of that nature. Whenever the traders find that this is the range in which that particular currency is trading and try to sell once the gain happens and afterwards buy once the drop happens, then suddenly they gain and go higher level so that the traders get trapped. No? They try to trap every type of traders, the scalping, the swing traders and the position traders. But if you spread the risk, then the position traders cannot be affected. Especially if you take a very less position in the market, like 1 or 2 positions only, and not to add more positions every 20-30 pips drop and things like that, you will be quite safe in the market, and you can just wait for 1 or 2 days, and also still you will be able to see profit. And if you use the hedging, then you can do effectively either way trading, and you will continue to make money from the market. And Randy, what will be the final support for Euro today? As far as I am concerned, it's not a question of support and resistance which is playing in the market. Where exactly plenty of stops are there, then they will try to reach up to that level and hit the stops and earn money. So you might be focusing on the levels. See, on Friday, you know that after that non-farm payroll, which was less than that of the expectations, even though it was positive, they made initially a gain as if it is a risk appetite in the case of Euro. Then followed by that, they made the drop, giving a different type of interpretation. Then people thought that, okay, Euro is going to drop because it is less than that of the expectations as far as the job creations are concerned. But after some time, they started gaining the levels again. So if you think that there is any support and the resistance in the market, and you are going to be disappointed, because we know technically also the support can be breached, the resistance can be breached, and so next to impossible it is to say that this is the bottom or this is the top. So don't ask such questions, because I understand you are asking that particular question to enter into the market at that particular level so that you will not be stopped out. But if plenty of traders enter around 1.36, because they have shown it twice, so when they come to 1.36 and plenty of traders might think that it is a support and buy, they could make another downward move and hit all the stops and make upward move. So even the players won't be knowing what will be the bottom they wanted to set. Ultimately, where the plenty of stops are there so that they can make billions of dollars, and they will try to hit up to that level even though the data is negative or positive. Always keep it in mind. So it is next to impossible to determine. Statistically, we can determine the support and we can coolly say that it is support 1, support 2, support 3. Once support 3 is breached, then again we can say support 1, support 2, support 3 technically. Fibonacci retracements of different ranges, and we can continue to give interpretations, but at the time of formation we will not be able to say that this is the bottom. But our methodology is, once the low is set and not breached for more than 30 minutes, we assume that it is at bottom and try to take a buy position and keep hedging in order to limit the risk, because we don't say that our reading is 100% perfect. And once the position makes profit, we try to keep stop at entry and remove the hedging order. So if you focus more on the trading strategy rather than trying to estimate the support and trying to enter, you know that many of the times they may come closer to the support and reverse, or sometimes they breach the support and reverse. So if you had a bad experience, then you may not be able to follow it. And immediately, what do you think? It is better to widen the stop. Then sometimes they may hit widen the stop and then go up also. So don't try to play with such contentions in the market, because the players know very well the trader's psychology. And physically they see where the stops are and they are willing to hit the stops, irrespective of the data or the sentiment what they have created. And why they have gained the levels on Friday in the case of Euro, no interpretation was given. And the basic information is, when after the drop, a lot of traders have taken the sell positions or the longs have been liquidated, and they gained and they earned on either side silently. They used only non-farm payroll as a trigger, nothing more than that. According to my estimate, similarly this is again an estimate. It may be right or it may be wrong. They might go below that of 1.36 during the course of this particular week and set the low and then try to reverse the market. And always understand, when they don't stay near the low for more than 2 hours or 3 hours or 2 sessions, then that could be the low. In case, today what rate can we enter into the other market in Euro and GBP? And our policy is, when Euro is trading near that of the high, not breach the high for more than 30 minutes, then we try to take a sell. Similarly, when it is closer to low and not breach the low for 30 minutes, we try to take the buy. When it is in the middle level, we don't enter into the market. Say for example, they are holding around 1.3770 from that of 4 GMT onwards. So about 1.5 hours, if you have taken a sell or a buy, we will be simply holding the position. What is the use? Simply holding it, aiming about 1 pip profit and 1 pip loss and things like that. It will be really frustrating. So don't enter into that market when it is in the middle level. When they are closer to low, at least 5-15 pips closer to low, then probably you can think of taking a position. And as I explained many times, during the start of the session and during the end of the session, they are active in the case of majors. During mid-session, they handle the crosses. That is why you come across all the contrarian moves. So when they are handling crosses, if we try to enter into the other majors, they may not show any profit for you. You will be simply holding the position, wasting your time, and tension will mount up. So we can avoid such things. Okay. Then Sijavan, how far do you expect Euro to GBP to drop? Yeah, GBP could test 1.3750 or 1.3770. Below that of 1.38, they may show briefly and then start going up. They are all theoretical estimations, and don't go with that. And if it goes wrong, don't blame me. It is similar to that of support and resistance, what has been calculated by other statistical methods. And it can go wrong, because ultimately players are not interested with regard to the levels. They are interested in making money. They are highly focused in making money from that of the market. We are only looking at that of the levels, and we become bullish and bearish alternatively. Whereas they create the sentiment and simply act against the traders. So on Friday, know that they quickly gain the levels, and afterwards people would have thought that Monday there could be a further continuation of the gain, because after non-farm payroll they made a drop and reversed and gained most of the levels. But now they are dropping it again. So this we need to understand, because simply gaining the level is not their objective, or simply dropping the market is not their objective. They want to create that sentiments by making a drop or the gain and suddenly act against the traders once they are committed to the position. That's all. That is why you come across session. Every session you find the intraday trend reversals. In Dilip, how much more net change can be expected in USD-CH? USD-CH has got a potential to go up to 200 pips positive net change. At the moment, 82 pips is shown, but still, I am very sure the gain is mainly to handle the crosses, and they are expected to make volatile moves, and probably when it comes closer to low and breach the low and make a downward stop and or an extended downward stop and try to buy. Around the 0.88 area, you initiate the long, because last week they have been showing about 0.87, and so this time they could show up to 0.8812 or 0.8809 and things like that and start gaining the levels again. But it doesn't mean that you can do sell and buy trade now. So doing a counter trade, you have to be wise enough to do that, because they are all estimated levels. They may reach or may not reach, and the best way is wait for such breach, the low, and then try to initiate the buy positions, rather than doing a sell near the high and they are not dropping it. And see, you know that whenever they make a drop like this, and immediately near that of the high, the traders sell. So what they do, they make an upward stop and then stop dropping it. So when you try to do a sell and buy trade, they could make an upward stop and then you might be stopped out. The best way to trade in the market is look for a great opportunity of an upward stop and sell a downward stop and buy. And you know how to define the downward or the upward stop. If they just go above that of the high and stay there only for less than 30 minutes and come below that of the initial high, that is upward stop. At the time, if you take a sell, and if you become practiced with that or very convinced with that method, then probably in the first 10 minutes itself, you will find that the high is set. Afterwards, they are not breaching it, and they simply stay above that of the initial high and start melting down, coming down below that. Then at that time, you can take a sell. You'll be able to easily keep stop at entry. Then the market start dropping, we'll be able to book profit. Similarly, the lower downward stop, you identify whether the downward move is a stop or an extended move. Accordingly, wait for 30 minutes to 2 hours and then initiate the long position. And when they keep cutting the low for every 30 minutes, understand they wanted to make an intentional move, a downward move, clearly on the upside. Then wait for 2 sessions, and the third session, when they make a very quick downward move, try to take buy position. So identifying the moves will give you a definite indications of the market moves rather than focusing on the levels. Then Kanan, weak beginning false move is down move. Yes, they are doing a downward move as a weak beginning false move now. Then must. How to differentiate between false move and the stop one? False is the one, see, currently the trading around 1.3763. They come up to 1.3745, not breaching the low, and go start for 30 minutes. After coming closer to this, they don't breach the low for 30 minutes, and slowly you will find they will go up. That is a false move. When they make a false move, followed by that will be an extended move. So they come up to that of the low and not breach the low, quickly gain up to that of the high and breach the high and stay above there for 30 minutes and start gaining for 2 hours. Then element stone. Could you repeat the correlation you find out between pairs, moves and commodities? Does it apply to gold? No, gold is a commodity. Whereas the commodity is not 24 hours market. You know that NYMEX market, you find gold is active during Hong Kong time frame and the London time frame and also New York time frame. But the rest of the time you will find in the online trading platform some moves, but they are different moves. So whereas Forex is concerned, you find it is a 24 hours market. Similarly, the stock market, you find in the platform, you might see the codes appearing in the trading platform. It might be related to that of the futures and things like that. But they're all having a time frame of 7 hours, 8 hours, etc. Whereas here in the Forex market, it is 24 hours market. So here the type of moves what they make is different when compared to that of the commodity and stock market. So we cannot blindly apply the same rules for all the markets. So we can only quote among the pairs in order to understand whether they are making contrarian moves. But if you try to relate it to the other markets like the stock market, many say that when Dow increases, immediately you will find gold, euro increases, and sometimes gold also increases. And there are other people who say that whenever the stock market rises, the commodity markets drop. Some others say that when euro rises, gold drops. So they are all nothing but apparent correlations or coincidences. And suddenly they just change such sentiments. So you have to always keep it in mind because every market is unique. Depending upon the longs and the shorts, they try to make the moves in the respective markets and they are not comparable. In Rooney, up to what level high can Australian dollar go today? Yeah, they have set the high and I don't think they may breach it. Then Carlos, do you think that the US Fed will implement QE 3 before the next year election? I don't think so. They will go for QE 3. That is what my personal view as per the algorithm also. And it may go wrong also. So it is only my view. That's what I can tell you. So Javan, the levels you gave in is for euro, not GBP. Please give the levels for GBP. Given the levels, in the case of euro was 1.3550 could be the low and similarly 1.375770 could be the low in the case of GBP. They are all estimated levels. It can go wrong. Again, please keep it in mind. They are all theoretical estimations. Then DDPT, how much downward move do you see in Australian dollar? Australian dollar is expected to come below that of the parity. They could swing here. Less gain and more drop moves are expected to happen in the case of Australian dollar as it is reversing from that of the multi-year reversal. Could Australian dollar be seen at parity this week? No, may not be. This week slowly they will make a drop and they may not revisit again parity. Earlier they went down to 0.93 and then came up very fast, quickly, and they are offloading their positions again, holding at a higher level above parity. And once they build enough sell positions, then you will find it doesn't go up to even parity. Then able. We do not believe in support and resistance level as to what textbook teach. Okay. It is not the textbook. Because you know that what is identified as a science about 50 years back may not be a relevant science now. You know, that is how science grows. You know that Dalton's atomic theory, the atom cannot be split. That is ultimatum. Now we know that it has been disproved. And you come across nanotechnology. Okay, after splicing the atom, they can go further down into the finer, minute electronic particles. And they can even try to just induce them to make an opposite spin. So it is not that what has been identified as a support and resistance in the market about 20-30 years back need to be the same method. Still the market has to follow. And you know that market dynamism continue to change. In a changing environment, no fixed methodology will work. And you know that method of population estimate, what they have done by Malthus and others, because at that time only the statistics started. They used a very simple arithmetic methodology to do the population study world over. Now you come across a method wherein they are telling that this particular child is notionally the 7 billionth child, and this sort of fine tuning of that particular child becomes possible. And you know that population study, earlier they used to go in with that of the sample studies, but now you go in for absolute counts. So you find that statistical methods continue to change. So it is not that I am trying to just ridicule supports and resistance, because there are much more fine-tuned informations which are needed to study the market. Please don't think that I am against statistics. I am a statistics professor by myself. And the conventional way of estimating it ought to be modified. That's what I'm trying to tell you. See, science grows that way and nobody can prevent it. Then DDPT. How is expected US equities? Equity markets are expected to gain levels in this particular month. Elements don't. Any important support and resistance levels you may foresee for gold? Gold could come to about 1,775-80 level and probably closer to 1,800 if needed in a down upward stop. And afterwards this month it is expected to come down. It is also undergoing the multi-year trend reversal moves, and so it may not visit 1,900, it may come to 1,600 and 1,500 levels during the course of this. And when Euro and GBP gain aggressively, then probably the money might flow from that of gold to that of Euro and GBP, and then as a result, more of profit booking moves could happen in the case of gold. Then Phoenix, could you please suggest a book explaining the technical analysis in a very simple way? See, there are so many books pertaining to technical analysis. Innumerable books are available. If you go to Amazon.com and others, you find all the methods of technical analysis. But unfortunately, nobody is going for a new methodology for a changed dynamism in the market. And everyone is trying to use it, what has been invented earlier, as a methodology of estimating it. And nobody is going for a new method or a new approach, depending upon the quick moves happening in the market and the subdued moves happening in the market on certain times. So invariably, the technical analysis being applied over that of the chart. And this is the method you come across now in most of the chart providers, even all the online trading platform providers. They also give the chart and also all the applications over that of the chart for the traders to identify, like Fibonacci retracement, then Bollinger Curves, etc. And ultimately, one need to understand that the market dynamism is totally different from that of these estimates. And that is why you find that many say that this particular analysis is lagging behind and it is not giving the actual calls. Why? Because all the statistical analysis are pertaining to that of the past performance. And the past data is being taken into consideration in order to give you projections for the future. And if you go in for a linear method of estimate, invariably it will continue to extend the line like a regression analysis. And invariably we need to identify when exactly the turnaround is going to happen. And these statistical methods may not be able to give it. And there is another method called curvilinear analysis. And in that you'll be able to find out when exactly the turnaround could happen. Still again, it could be a lagging indication. So you find every statistical analysis has got its own limitations. That is why most of the analysts go in for the combination of various analyses and try to derive what could be the possible moves in the market. And doing that particular study for a short time of 30 minutes or 15 minutes and charts and also 4 hours and 8 hours chart or a daily charts, etc. In order to ascertain what could be the trend, invariably you find the daily chart might show a downward move and the shorter time frame charts shows an upward move, and you will really get confused and you have to immediately think, am I going to do a short-term trade or a long-term trade and things like that. And in that particular process, the supports and resistance could be calculated and they may simply breach the support and the resistance, and the long-term chart might look reliable. That is why many of the traders or the analysts always depend more on the long-term charts rather than that of the short-term charts. But we have to trade short-term. There comes the importance. So in the long-term chart, suppose if somebody says that Euro has got a strong support around 1.33, but when it comes to 1.33, the long-term chart could show that it can go to 1.27. So it doesn't help you in taking a trading decision. But once it goes to 1.637, then it will say, okay, 1.33 or 1.31 is the bottom. But what is the use? But we are not traded or we are not taking the position at that time. So if you think in that particular line in a tangent way, then you will be able to understand that you have to develop your own system of understanding the market. If you think that the statistics is going to help, it might lag behind most of the time. Because that was the trigger for me to go in for the development of the algorithm. Then Kanan. Not cutting the low or the high for 30 minutes. Now it is a mid-session, so we will not focus on the majors. We will look for the breach of the low or the high during the late session and the next time. In the case of Euro, they breach the low and stay below there for 30 minutes. Understand they could make an extended move for 2 hours or an intentional move for 2 sessions. Keep that in mind. Don't enter into the market suddenly. Always give importance to that of the timings what I have given you. You'll be able to have or determine the safe entry levels. Then element stone. I think Ikimoku indication is reliable, is a good percentage. Okay, fine. You can use it. I don't want to comment on every statistical analysis. Let me tell you honestly, the probability of success varies from one statistical analysis to another. And from time to time, they show variations because the market dynamism changes. And you know that about 2-3 years back, GBP used to make a very aggressive move. Easily, it used to make about 250 pips on upside and 250 pips on downside. That sort of moves we used to see, and that was a great trading opportunity those times. But you find GBP is making very less volatile moves nowadays when compared to that of Euro. So from time to time, the focus might vary to different currency pairs. So you need to identify that. If you simply focus on one currency and try to use all the technical analysis, and what the type of analysis you have done yesteryears in GBP may not be applicable now. Then must. Does false moves take place only during the gap time? They do it during the gap time, also before the data release. Enable. So for gold, do you expect them to go above their all-time high soon? And when do you think gold will head by end 2011? No, they may not revisit 1,900 in this year, and they are expected to make that downward move and swing around the 1,600 to 1,700 area. I have been following your strategy and I am consistently making profit. Okay, fine. Thank you. See, still, don't blindly follow me. Let me tell you very honestly, because these are all my perceptions. Over a period of 20 years, I have been observing the markets and I have seen a lot of changes happening in the market, and accordingly, I have done the studies. But still, You are younger than me and you have enormous time before you to make the market study. Focus more on the market study rather than simply focusing on the trades. So understand the market behavior. Then it becomes a child's play for you to make money from the market. That's what, as a simple advice I can give for a lot of youngsters who are now entering into the market. And try to control your emotions so that your study will become very promising. So let me explain the timings. From today onwards, you will find the European session will be from 8 to 14 GMT. 14 to 14:30 GMT will be the gap time, and US sessions will start by 14:30 GMT up to 21:30 GMT. US session will prevail, and 21:30 GMT onwards, the gap time starts before the start of the next day. Then, with regard to the expected market moves, swing and slide moves are expected during the Japanese session. Now they are making a slide coming closer to that of the low in the case of Euro and GBP, and quick drop is anticipated during that of the early European session, and a swing near that of the low could happen, and a drop during that of the US session, and then slide could happen slowly. So week beginning false move could be in the form of an intentional move, because on Friday they made an extended upward move and sustained the high and built the sell positions, and against that they wanted to drop the market and buy. So on a daily basis they do this. Alternative days, we need to understand it with a simple terms rather than complicating ourselves with regard to the market study. Then with regard to the initial lows and the highs, still they are not breached the initial low and the high in Euro and GBP, and USD CHF, they breached the high and afterwards they are hovering around that particular level. Probably they could make an extended upward stop and then start making the slide in the case of USD CHF, because now you find 92 pips positive net change when Euro is making only 25 pips negative net change. And USD they made a brief downward stop and stop cutting it, currently staying around 78.10. Let them breach the high also and sustain above that high, then probably you can initiate a buy. Then you may see quick profit when they continue to rise. Australian dollar, they are not breached the low or the high, and they are still closer to low. And you know that the commodity pairs lead the rally and lag behind. To watch it. Then Canadian dollar, the low is not breached and closer to low as they are doing contrarian moves, and probably they may make a brief downward stop and start gaining the levels and make an upward stop. That sort of moves could be seen in Canadian dollar. When they make a downward stop, try to buy. When they make an upward stop, exit out of the position. So I take this opportunity to thank everybody and also FX Street for this nice opportunity to present the webinars on a daily basis. So I'll come back again tomorrow and review the market before you during yet another session of Asian Session Live Market Analysis. Thank you one and all. See you tomorrow.